Hey there, welcome back to my channel, it's me, the Mind Injector. Today, I've got something exciting for you. Have you ever wondered how to catch that next big breakout stock before it takes off? In this video, we're diving into the art of spotting and profiting from breakout stocks. And trust me, this is a skill you'll want to master. What if I told you there's a way to predict which stocks are about to skyrocket? Sounds too good to be true, right? Well, it's not just about luck. It's about strategy, analysis, and a bit of intuition. So, let's dive into the key strategies for identifying those breakout stocks that have the potential to make significant gains. Look for companies that offer something unique. It could be patented technology, a recognizable brand, or a distinct business model. These factors can give them an upper hand over competitors, increasing the likelihood of a breakout. Companies like Tesla or Apple are perfect examples. Tesla revolutionized the electric vehicle market with its cutting-edge technology and strong brand, while Apple continues to innovate and maintain its dominance with unique products and a loyal customer base. Always stay updated with market trends. By recognizing sectors on the rise, you can spot where demand is increasing and where new opportunities might emerge. For instance, the renewable energy sector has been booming due to global shifts towards sustainable energy solutions. Companies involved in solar, wind, and other renewable energies are seeing substantial growth. Similarly, the tech sector, especially companies focusing on artificial intelligence and machine learning, is showing immense potential. Breakout stocks often experience a surge in trading volume. This can be a sign of growing interest from investors. Watch for stocks breaking through resistance levels or forming bullish chart patterns, like the cup and handle or ascending triangles. For example, if a stock has been stuck at a certain price level but suddenly starts to see higher trading volumes and breaks through that price point, it's often a strong indicator that the stock is about to move higher. Companies with solid fundamentals are usually more likely to break out. Look for those showing increasing revenue, growing profits, and positive cash flow. These are indicators of a company's strong financial performance. Also, quarterly earnings reports can provide valuable insights into a company's financial health. Companies consistently beating earnings estimates and showing revenue growth are often poised for a breakout. Think of companies like Microsoft or Google that consistently show strong financial performance. Compare a stock's performance to its peers. Stocks that consistently outperform their sector tend to have more room to grow. The Relative Strength Index, RSI, is a handy tool for measuring this. RSI can help you determine if a stock is overbought or oversold, which can be critical in making buying decisions. Stocks with a high RSI compared to their peers often indicate strong upward momentum. Recent developments can drive stock prices up. This could be a new product launch, favorable regulatory decisions, or significant mergers and acquisitions. Positive earnings surprises and upward revisions in earnings estimates can also be strong catalysts. For example, a biotech company receiving FDA approval for a new cure can see its stock price soar. Similarly, a tech company launching a groundbreaking product can trigger a significant stock price increase. Once a stock reaches your target price, it might be wise to lock in your profits. Breakout stocks can sometimes fall back after a surge, so it's important to know when to exit and move on to the next opportunity. Having a predetermined exit strategy can help you avoid the emotional decision-making that often leads to holding onto a stock for too long. Use stop-loss orders and set target prices to ensure you capture gains and minimize losses. Now, let's switch gears and talk about growth stocks. Not all growth stocks are created equal, and finding the right ones can lead to substantial profits. Here are some key traits of winning growth stocks. Companies with innovative and forward-thinking leaders tend to grow faster. Look for executives and managers who have proven track record and a clear vision for the company's future. For example, leaders like Elon Musk or Jeff Bezos have transformed their companies into industry leaders through visionary strategies and relentless innovation. Innovative leadership is crucial for driving growth, and companies led by such leaders often outperform their peers. Focus on companies within industries that are expanding rapidly, like technology, healthcare, and renewable energy. These sectors often provide more opportunities for growth. For instance, the electric vehicle industry is seeing massive growth as the world shifts towards sustainable transportation. A company with a growing market share is usually a strong candidate for growth. Look for companies that dominate their industry and are continuously capturing more market share. Companies like Amazon and Google dominate their respective markets and have shown consistent growth over the years. A growing market share often indicates a company's competitive strength and its ability to fend off rivals. Steady growth in sales, revenue, and earnings over consecutive quarters is a key indicator of a company's performance. Companies showing accelerating growth are often good investment prospects. For instance, companies like Shopify have demonstrated consistent sales growth, capitalizing on the e-commerce boom. Such consistent growth often leads to rising stock prices and makes these companies attractive to investors. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. Companies with a broad target market have more potential for sales growth. The larger the pool of potential customers, the greater the opportunity for increasing revenue. Think of companies like Meta, which serves a massive global user base. The larger the market, the more opportunities a company has to expand its revenue streams and grow. Use fundamental analysis to ensure you're not overpaying for a stock. Ratios like the price to sales and price to earnings can help determine if a stock is undervalued or overvalued. Investing in undervalued stocks can lead to substantial returns. For example, during market corrections, many high-quality growth stocks may become undervalued, presenting excellent buying opportunities for savvy investors. Understanding these factors can help you identify the best growth stocks and pave the way for higher returns. Growth investing can be incredibly rewarding, but it's not without risks. By focusing on companies with strong fundamentals, competitive advantages, and promising growth prospects, you can increase your chances of finding stocks that will deliver significant returns. In summary, spotting breakout and growth stocks requires a strategic approach. Keep an eye on competitive advantages, market trends, volume and price movements, strong fundamentals, relative strength, and potential catalysts. And remember, know when to exit and take your profits. By following these strategies, you'll be better equipped to identify and profit from the next big stock in the market. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.